Now let's begin income from house property problem solving in CMA. Okay, let's continue the discussion. In salaries, 38 problems we completed. Please must and should watch that, don't miss it at all. Now house property directly. Okay, now first calculate expected rent from the following. What is expected rent in house property? What is expected rent? Fair rent or municipal value, whichever is higher, but subject to maximum of standard rent. Correct? Municipal value, you see here, you know, municipal value or fair rent. Municipal value. Okay, municipal value, and again standard rent is 10, so same. So expected rent is 10. 12 or 16, 16. Standard rent is 14, therefore maximum 14. 12 or 16, 16. No, give no standard, so therefore 16 is expected. 18, standard is 8, therefore 8. 16 or 17, 17, but standard rent is 20. Since more is there, no problem. 17 I can expect. Yes or no? Next, when there is neither unrealized rent nor vacancy period, that and all leave it directly. Okay, municipal value 120, fair rent for whole year is 105, therefore expected rent 120, standard rent 0, therefore expected rent is 120. Correct? Now they are asking gross annual value, they are asking us to compute. So step number 1, 120. Correct? Step number 2, receivable is 100. Receivable is 100, and remember unrealized rent vacancy concept is not applicable. Okay, receivable 100, period for which it was occupied is entire 12, which means there is no vacancy, whichever is higher, therefore gross annual value 120. Next, you remember how to calculate gross annual value. Step 1, expected rent. How to calculate expected rent? Fair rent or similar property rent or municipal value, whichever is higher, subject to maximum fair rent. Step 1. Step 2, actual rent receivable let out period multiplied by monthly rent is equal to receivable minus unrealized rent is equal to actual rent received. Step 3, if received rent is less than step number 1, vacancy is there, if at all vacancy period rent is added to step number 2, if step number 2 is becoming more than step number 1, because after adding vacancy period rent, then the gross annual value is original step number 2. Even after adding vacancy period rent, step number 2 answer is still less than expected rent, then vacancy is not the reason, whichever is higher, expected rent itself is GAV. Correct? That's it. Now here 130 or 130, yes or no? Standard rent 100, therefore step number 1 100. Now actual and receivable 110, therefore gross annual value is 110, whichever is higher already. Okay, next, if you don't have grip on this, you will not be understanding it. Next, 140 or 135, 140, standard rent 135, therefore step number 1 comes to 135. Actual rent step number 2 also 135, therefore answer is 135. Then 155, but standard rent 180, therefore step number 1 is 155. Actual rent 175, therefore 175. Yes or no? Now here 175, restriction is step number 1 165, actual rent 200. Now last one, vacancy. Okay, 180 or 168, 180, but actually step number 2 144. 100 is for 10 months. Now how many is for 2 months? Actual and receivable 100 ba, number of months rented how much? 10, therefore monthly rent 10. Okay, vacancy is there for 2 months. The 2 months rent also, here they said nor vacancy. Okay, there is no vacancy, remaining 2 months occupied by SSC probably, that is not apply vacancy logic. 100 140, whichever is higher, 144. That's it, the answer. What happened? Gross annual value, house number 6, where are they? Where they took all wrong numbers? This answer 120 correct, this is 130 correct, 135 correct, 175 correct, 200 correct. Last one, where 120, this numbers itself did not come. Oh, okay. Period of previous year. Okay, here previous year period is 10 months only. Okay, probably property was in existence for 10 months only. You understood? They took one assumption that properties are only for 10 months, whereas here it is given for whole year. So you should take it only for 10 by 12, 10 by 12. That's how they took. 180 into 10 divided by 12 is equal to 150. Correct? 168 into 10 divided by 12 is equal to 140. Correct? Okay. Standard rent is also given for whole year, into 10 divided by 12 is equal to 116. Standard rent is how much? Sorry, for whole year, no, 144. 144 into 10 divided by 12 is equal to 120. Therefore 120 or 100, 120. Perfect answer. Here, no, period of previous year in months, nothing but in this year how many months are there? They are saying 10. Year will not have 10 months. Indirectly what are trying to tell, property was existing only for 10 months, which means April and May month it would have been in construction. 1st June onwards only construction certificate is completion certificate we would have got. Then 10 months only you can expect rent. Correct? That's it. Super question. Next, illustration 41. There is no unrealized rent but no vacancy. Oh, unrealized rent is there but no vacancy. Super question, easy only. Okay, again, by the way, how many months it is there? Nothing is given, thank God. All 12 months property is there, correct? Municipal value or fair rent, whichever is higher. Okay, fair rent. Okay, but rent control act. So step number 1 answer is 50. Actual rent receivable per annum is 120 minus unrealized rent 2 months means 20, correct? So monthly rent is 10, correct? So unrealized rent 20 is equal to 100. Step 1 or step 2, whichever is higher, gross annual value is 100. So first question answer is 100, correct? Then second question, house number 2, whichever is higher, 500. Therefore step number 1 is 500. Step number 1 is 500. Step number 2, receivable is 600, but 3 months unrealized. 600 into 3 divided by 12 is equal to 150. 600 m plus 450 only, this one. Oh, 450. But remember, there is no vacancy. Whichever is higher, 600. Yes or no? Step number 2 answer 450 we got. Then 30 or 300, whichever is higher, 300. So step number 1 is 300. Now step number 2, 180 gross minus 18 you see. Okay, 162. Step number 2 is 162. So 300. No. So no. Whichever is higher, 300. Restricted to standard and 240, no? 240 or 162, whichever is higher, 240. Next, 100 or 300, but restricted to 250, correct? Restricted to 250. If at all, if you are feeling very speed, I am solving, I am not explaining. It is already explained in CA Enter EO class very clearly. Even in marathon, the logic is told. Watch that and then watch this. That is why you need to understand. Okay? Yes, sir. So, next, standard rent. So, and repeatedly watch. If at all any point you didn't understand, repeat mode you watch. Whatever logic is there, compare with CA Enter income tax, whatever income tax book you have, compare with it, you will understand. Next, that's why I already repeated provision at beginning once. Once watch that, you will understand. This is only a problem solving, not a concept explanation video. Next. So 250, step number 2, 360. For 3 months vacancy is there, no? Into 9 divided by 12 only you should consider. 270. Step 2 answer is what? 270. Whichever is higher, 270. Next, 315. So step 1 is 315. Step 2, 150 into, okay, 10 months rent only divided by 12, 125. Okay, whichever is higher, 315. The answer is 315. Now look at 100, 500, 100, 100. Okay, 500. Why we got? Yes, correct only, no? 500, 300, whichever is higher, 500 only. Correct. I mistakenly took 100, 500, 240, 270, 370. Okay, perfect. Now there is a vacancy. When there is a vacancy period but no unrealized rent. Oh, another problem is with unrealized rent. Nothing, not given. So quick, no? 42. Now look at, be clear. Okay, remaining vacant, vacancy period is there in all the cases. Okay, wait. Now gross annual municipal value, whichever is higher, this one, standard and 300. Therefore step 1 answer is 300. Okay, step 2, actual rent is per annum they gave 600. Okay, but actually this is per annum, but 11 months only we received rent. Into 11 divided by 12 is equal to actual rent received is 550. Anyhow, step 2 is higher than step 1, so we don't have to look for that 23(1)(c) concept. Directly gross annual value is 550. Very good. So 600 restricted to S1. So step 1 is 180. Here I don't have to check it also. 900 into 9 by 12. Only actual rent received is how much? 675. Actual received is 675. Therefore the answer is 675. See, when I will worry, if step 2 actual rent received is less than step number 1, then I should think about vacancy, all that logics. Yes or no? Next, 400 or 750, whichever is higher, 750, but restricted to 280. Oh, step 1 is 280. Now step 2, 300 into 10 divided by 12 without vacancy, 250 rupees only rent I received. Now you see, step 2, 250. Actual rent received is 250. See, per annum 300 means into 2 months vacancy means 10 months rent only you actually received. 300 into 10 by 12, 250. Now step 2, 250. Step 1, 280. Okay, step 2 is lower than step 1. 2, condition number 2, 2 months property is vacant. 3, because of vacancy step 2 is less than step 1. Okay, we'll check out. If vacancy is not there, my step 2 would have been 300. Step 2 would have been 300. Yes or no? Because of vacancy, my step 2 is 250. Now, because of vacancy, my step 2 is lower. So, now you can't charge me higher rent. My actual answer is original step 2. Original step 2 is what? 250. 250. Exactly. Next. 500. Step number 1, 225. Yes or no? Step number 2, 240 into 11 divided by 12 is equal to 220. Okay. Now, again here also. Step number 1, 225. Step number 2, 220 came because vacancy. If vacancy is not there, my step 2 would have been 240. Okay. So, therefore, the answer is actual step 2, 220. Next. 300, 250, step number 1. Okay. 216 into 10 divided by 12. My actual rent received is 180 only. Remember, 180 only for 10 months. Even if at all vacancy not there, it is 216 only. Okay, my actual rent received with vacancy, without vacancy is always less than expected rent, which means I'm charging lower rent. I can't claim benefit. Therefore, gross annual value 250. Correct? Next, step number 1, 240. Step number 1, 240. Here also, actual rent per annum is 240. You know, without that 220. Actual rent received is 220. Actual received is 220, but without vacancy it is 240. Even with vacancy, without vacancy, my step number 2 answer remains the same. Okay, my step number 2 answer remains the same. I will go with the 240 logic. No, actually no. If at all, wait, if at all I don't have vacancy, my actual rent is 240. Whatever expected rent you are saying, no, that much amount I am ready to pay, that much amount I am ready to show. But in my question, actual rent is low because of 1 month vacancy. Because of vacancy only, I am not able to reach expected rent level. Therefore, my actual rent is to be treated as gross annual value, which is 220. That's correct. Are you clear? Hello? So the answers: first one 550, second one 675, third one 250, 220, 250, 220. Perfect. Easy. Next. X owns a house property in Pune, correct? Details relating to which are municipal value 2 lakhs per annum, fair rent 1 lakh 80, standard rent 2 lakh 10. It is let out throughout the PO. Rent 10,000 per month up to 15th October and 12,000 per month thereafter. Okay, so for 6.5 months, 10,000. Another 5.5 months, 12,000 per month. The property is transferred by X to Y in February 2028. Okay, X to Y. Who is Y? We don't know. Okay, which means X is owner only for 11 months, remember. Which means step 1 expected rent we should compute only for 11 months. Hello? But listen, pa. Yes or no? You're able to just nod. Okay. So, X transferred to Y on 28th February means March month is not the owner. When you are not the owner for that 1 month, expected rent also you should compute only for 11 months. Here they gave per annum figures, remember. Okay, you should convert them into 11 months first. Be careful. However, oh wait, there is a still. However, Y failed to recover rent of March. Okay, Y rented also, he could not recover for the month of March. Okay, why unrealized rent is unnecessary for us. Okay, find gross annual value in the hands of X, Y both. Oh, for Y, no, gross annual value will be computed only for 1 month. For X it will be computed for 11 months. Okay, some very good question actually. Okay, for X, no, for Mr. X, no, I will compute for 11 months. Y I will compute for 1 month. Correct? First, expected rent per annum they gave, remember, 2 lakhs. So 2 lakhs into 11 divided by 12 is equal to 1,83,333. Balance amount here 16,667. Correct? No, it is not expected rent. What is municipal value? Municipal value, yes or no? Municipal value. Second one is fair rent 1 lakh 80. Fair rent 1 lakh 80. So 1 lakh 80 into 11 divided by 12 is equal to 1 lakh 65,000, whereas here it is 15,000. Standard rent how much? Standard rent is 2 lakh 10. Okay, fine. So 2 lakh 10,000 into 11 divided by 12, 1 lakh 92,500 minus 2 lakh 10,000 is equal to, for him standard rent is 17,500. Therefore, expected rent is whichever is higher restricted to this, yes or no? Anyhow, less than standard rent only is there. Therefore, expected rent is 1,83,333. This is step number 1. Agreed? 16,667. Then step number 2, actual rent charged by X how much? X 11 months in 11 months. Okay, April to 15th October. April to 15th October. First I will calculate April to September. Okay, 10,000 per month multiplied by 6 months is equal to 60,000. Correct? October 1st to, October 1st to 15th October. October 1st to 15th, exactly for 15 days. 10,000 into 15 divided by 31 is equal to 4,838. Again October 16th to 31st, the monthly rent is how much? 12,000 thereafter. Correct? 12,000 multiplied by 17 days divided by 31 days. Correct? Not 17 ma, 16. 16, yes or no? So 12,000 into 16 divided by 31 is equal to how much it is? 6,193. Then again November to February only. Okay, November, December, Jan, Feb, 4 months into 12,000. 12,000 into 4 months is equal to 48,000. This is actual rent receivable. Correct? 60,4838 plus 6193 plus 48,000 is equal to 1,19,031. Okay, now expected rent of Mr. X is 1,19,031. Remember, there is no vacancy here. Vacancy information not given. Okay, whereas step number 2, for Mr. Y, he could not realize the rent. For him, unrealized rent is what? 12,000 receivable. Unrealized rent is again 12,000, therefore 0. But irrespective of that, vacancy is not there. Whichever is higher, this or this, whichever is higher, gross annual value is equal to 1,83,333. Here it is 16,667. How much is the answer? Wow, fantastic. Okay, straight correct answer. That's it. Easy or not? Next, when unrealized rent is there and vacancy is also given, you see, that's why I gave a format in our book so accurately you can easily compute it. Okay, after 44 then we have all this. Okay, unrealized rent is there, all that is there. Oh my god. Fine, it's okay. Okay, house 1, house 2, house 3. Okay, find out gross annual value, municipal value 150 or fair rent, whichever is higher. So step number 1 answer over. Hello, step number 1 120. Actual rent if the property is let out throughout the year 180. Unrealized rent is 25 and vacant was 3 months. So step number 2 is what you actually? Step number 2, per annum actual rent is what? 180 into 9 divided by 12 is equal to 135 minus unrealized rent is equal to 25 is equal to 110 only. Step number 2. Step number 2 is 110. Now step number 3. Step number 3. Array vacancy. Now step number 2 110. Step number 1 120. Step 2 is less than step 1. Okay, and there is a vacancy. If vacancy is not there, my step 2 would have been into 3 by 12, and my step 2 would have been 180 minus 25. 180 minus 25, my step 2 would have been 155 if vacancy is not there, which is even higher than step number 1. Right now my step 2 is lesser than step 1 only because of vacancy. Therefore gross annual value is 110. Correct? Next, 180 or 140. So step number 1 180. Step number 2 300 minus 40. No, here 11 months. You should take 11 months actual rent received. How much? 300 into 11 divided by 12 is equal to 275. Okay, actual rent received 275. Correct? Unrealized rent of last year is irrelevant for us. For current year it is irrelevant for us. We should take only current year unrealized rent. We should not take last year unrealized rent. Correct? Okay, in every year respective year unrealized rent only you should take. Now fine. Step number 2. Step number 1 180. Step number 2 275. Vacancy doesn't matter. First of all, step number 2 is higher than step number 1. Therefore 275. Correct? 240. So step number 1 is 240. Step number 2 150. Vacancy is not at all there. Unrealized rent is 120. 150 minus 20 is equal to step number 2 is 130. See here vacancy itself is not there. Whichever is higher, 240. The answer 110, 275, 240. 1 and 3 last fine. Last through. Now whereas here what happened here? Here period for which property was vacant. Okay, they got okay, wait a minute. Hey, correct? No, 275 minus unresident I should reduce. No, 235. Correct only. We understood that also. So see, 300 into 11 divided by 12. So actual rent received is 275. minus unrealized rent is 40, 235. Step 1, 180. Step 2, 235. Whichever is higher, 235 correct only. Our analysis correct. We just miss the calculation. Okay. Next. I think we'll wind up. Okay. From here we will solve in the next session. I think until now confident. Okay. That's it. So we'll continue discussion. Illustration number 45. It is also like we need to find out gross annual value. Okay. Now property situated at, doesn't matter. Okay. Municipal value, okay, per annum. These are per annum information. You see, these are per annum information. Municipal value fair and whichever is higher. So step 1 answer is over 70,000. Standard rent is more than that, so we don't have to worry. Step 1 expected rent is 70,000. Now step 2 actual rent. You see how much from April to July means almost for 4 months. For 4 months it is 20,000, and from October to February remaining period property was vacant. Okay, so which means August to September the property was vacant. March also the property was vacant. October, November, December, Jan, Feb, 5 months. Okay, so 45,000. So total amount is 65,000, which is step 2 actual rent received. Correct? Huh? Now step 3, what is gross annual value? Now first we have to see case 1. Is step 2 lower than step 1? Yes. Is there a vacancy? Yes. If at all there is no vacancy, okay, if at all there is no vacancy, she would have received. Okay, she would have received. Property was vacant, no? Property was vacant, right? So probably August and September she would have been received some 10,000. Yes or no? I am assuming up to September 5,000 per month rent. Okay. Then March month rent is 9,000. So she would have received extra another 19,000. Correct? If at all there is no vacancy, where the answer would be 84,000, which is more than step 1. If vacancy is not there, the actual rent would have been more than step 1. Right now actual rent is less because vacancy is there. So you should not charge me expected rent. You should only charge me actual rent originally received. So GAV is for 65,000. GAV is 65 for house number 1. Then house number 2, step 1 is this. Correct? Then step 2. So 6,000 into 4 months. Okay. Yeah, into 4 months is equal to 24,000. Into this one is for 5 months. Yes or no? 42,500. Already step 2 is higher. Okay. So 42 means 66,500. So whichever is higher, 66,500. That's it. Next. Then find out gross annual value in respect of the following properties. 3 properties they have given. Okay. Now first, period when the property remains vacant, 5 months, 3 months, 2 months. Unrealized rent they gave. Actual and receivable they gave. Receivable means what? For 12 months. Receivable is for 12 months. Okay. No, not even for 12 months. Sorry. Receivable was not for 12 months. Okay. Receivable is for let out period. Receivable is always for let out period. For 5 months it is. So 70k per month. How much the monthly rent here? 70k per month. No. Sorry. 5 months it was vacant. 350 by 7 you should put. 7 months it is occupied, right? 7 months it is occupied. Like how many days, how many months it is occupied? This was occupied for these many months. Can I say like that? So house number 1, 5 months vacant means 7 months occupied. 3 months vacant means 9 months. 2 months means 10. Now this actual rent receivable. Remember in our step 2 house property calculation, receivable within bracket let out months multiplied by monthly rent. Now how much is the monthly rent? How much in how many months let out? Total actual receivable, divide it with, you get actual rent per month. Correct? So how much actual rent per month? 50k. Okay. This is approximately 540 by 9. How much it is? 60. Then this is 60. Correct? So 60,000 is actual rent per month. So this we discovered it. Correct? This is something we discovered it. Now this is monthly rent. Fine. Now so whichever is higher, 500 restricted to, therefore step 1 is 500. Okay. Here step 1 is 720. Here step 1 is 600. Okay. Now look at this. So step 1, house number 1, 500, 600, 600. Am I right? 500. Oh, 720. House number 2, 720. Then step number 2, Actual rent receivable, they gave the answer 350, 540, 350, 540, and how much it is? 600, correct? 600 minus unrealized rent, for the same year, 10 0 150. Okay, 10 0 150, correct? Okay, 340, 540, 450. This is what actual rent received. Step number 3. Now, is step number 2 lower than step number 1? In all the cases, yes. And so condition 1 satisfied. Is there a vacancy in all the places? Yes, vacancy is there. So first I will do one thing. Okay, step number 2, if no vacancy, correct? If no vacancy is there, how much is step number 2? This is what my question. Now, how much is no vacancy? Vacancy period rent also you should add. Okay, original step number 2, I'm just adding. Okay, original step number 2, received amount plus vacancy period rent, correct? Plus vacancy period rent. How much is vacancy period rent? 5 months into 50,000, 2.5 lakh, 250, correct? 60 into 3, 6 3s are 180. Last one, 2 into 150, correct? Sorry, 2 into 60, 120. Now, if there is no vacancy, step number 2 would have been 590. If there is no vacancy, step number 2 would have been 720. If no vacancy, 570. You see now, wonderful this one. Okay, here step number 2, if at all vacancy is not there, higher than step number 1, which means here actual step number 2 is lower than step number 1 only because of vacancy. If that is the case, gross annual value is actual step number 2. Actual step number 2 is 340, correct? Now again, step number 1 720. Even if there is no vacancy, step number 2 is 720. Okay, here also step number 2 originally 540 is less than step number 1 only because of vacancy. If vacancy is not there, it would have been step number 1 higher than step number 1. Remember, therefore actual rent, gross annual value, original step number 2, correct? Now here you see step number 1 600, original step number 2 450. If at all there is no vacancy, step number 2 would have been 570. Even if there is no vacancy, step number 2 is still lower than step number 1. Here in both the cases, step number 2 is lower than step number 1. With vacancy, without vacancy, in both the cases, step number 2 is lower only. So because of vacancy, your actual rent is not lower. It was lower because of some other reasons. Therefore, you will not have the actual step number 2 logic for GAV, whichever is higher. Step number 1, step number 2, whichever is higher. Therefore, the answer is 600. Are you clear? So the answers 340, 540, 600. Easy or not? That's it. Okay, next. Next. Now test your knowledge, some test yourself. Okay, fine, no problem. Okay, shall we? Period for which it was vacant, which means 9 months occupied, correct? Okay. Oh, here actual rent. Okay, actual rent. If the property is let out throughout the previous year, they gave actual rent. If at all property was let out throughout the period they gave, means actual rent received we need to find out. Are you clear? So 3 divided by 9 months it is let out. This is let out for 11 months. This is all let out for 12 months, correct? Now 180 divided by 9, 20k, correct? 20. 300 divided by 11. Oh my god. No. Why you like? No. 180 divided by 12. Monthly rent, no, 15. Okay? Monthly rent. Actual rent throughout the period means what? Here itself we can figure out. 15 monthly rent, correct? This is monthly rent is 25. This is monthly rent is 150 by 12, you see. How much? Okay. Yes. No. 12.5. That's okay. No, 25, no. 300 by 12. Okay, fine. So 12.5. This is the monthly rent, correct? Now tell me period for which it was vacant we know. Now first of all, step number 1 we calculate. Whichever is higher, step number 1 is 120. Agreed? Because gross municipal value, nothing but municipal value, fair and whichever is high, restricted to standard rent. This is step number 1 for house 2. Step number 2 for house, for house 3, step number 1 is this. Okay, now again I'll go and put it. Okay, now step number 1, right now answers are what? 120, 180, 240. Okay, 120, 180, 240. Then step number 2, actual rent receivable. Receivable means what? Let out period multiplied by monthly rent, correct? Now a let out monthly rent is what? Your 15. Let out period is what? 9. 15 into 9, 135, correct? 135. Then 25 into 11, 275, correct? 275. Next, okay, 12.5 into 12, which is also 150. Here there is no vacancy, minus unrealized rent for the current year only you should take. Only 24, 25 you should take. 25, 40, 20. What is it? 25, 40, 20. Therefore actual rent received how much? 110. Okay, then 235, then 130. Now step number 3. Number 3, here you see step number in here house number 2, it's already higher than step number 1, therefore gross annual value 235. Here no problem. Whereas house 1, step 2 is lower than step number 1. Step 2 is lower than step 1. Okay, fine. I will do one thing here. What I will do? Original step 2 how much? 110. For that I will add vacancy period rent. I will add vacancy period rent. Now vacancy period was what? 3 months. 3 into 15 how much? 45, correct? So therefore it is coming to 155. In that case step 1 is 120. Oh, if vacancy is not there, step 2 calculation would have been higher than step 1. Right now step 2 calculation is lower than step 1 only because of vacancy. Therefore gross annual value is equal to 110. Okay, next for house number 3. House number 3, there is no vacancy itself. So step number 2 is lower than step number 1. There is no vacancy. So GAV is equal to step number 2 concept will not apply. GAV is equal to whichever is higher concept will apply, which is 240. So 110, 235, exactly. Easy or not? That's it. Next, house property problems are very quick, no? Like maybe we don't know. We need to see further problems. Only then we can understand. Next. So now here they are asking net annual value. How to calculate net annual value? Gross annual value minus municipal taxes paid is equal to net annual value with the following details. Assessment year 25, 26. Okay. Location irrelevant. Okay. Now municipal value. They gave gross annual values directly. We don't even have to worry about municipal value. Maybe municipal value we need to look for property tax, how much it is paid. Are you clear? Next. So municipal value, gross annual value they gave already, minus municipal taxes paid for the previous year. This is 5,000. Yes or no? This is 10%. When they gave percentage, it is to be applied on municipal value 20k, correct? Now you see here what are all taxes they are considering. Sewerage tax. Every tax that you pay to municipality is considered. Every tax that you pay is considered. Are you clear? Next look at. So 20k. 5% means what? 5% means what? 2 lakh into 5%, 10,000. Water tax is what? 6,000. Now again here. Okay, 5% means 15,000. Here it is 1,000 as usual. And again 5% means 15,000. Okay. Now again 20% means 80,000. 3% means 12,000. Okay. Then here 2% means 8,000. Okay. House number 5. Below actually they gave some information. We'll see that also and then rectify these values. Okay. Next, 12% means what? 4 lakh 25 into 12%. 51,000. Next, as usual 5% means 4 lakh 25 into 5%. 21,250. Okay, fine. Now wait. House number 3, municipal tax paid for the year 2001 to 2034 is 2 lakhs. This was old year data. Did they say that it is paid during the current year? They didn't say that it is paid during the current year, so I'll ignore. House number 4, municipal tax paid for the financial year 25-26 is paid. Actual additional information they said. Right now we are doing for assessment year 25, nothing but previous year 24-25. Oh, next year municipal tax also we paid. And I will assume that house 3 municipal tax also paid in the current year only. How much ever you pay, that much I will claim deduction. Yes or no? Now look at. So shall I calculate? Shall I calculate here? So gross annual value means 1 lakh, correct? This one is the main number. Okay, this one is the main number. So 1 lakh minus 5,000, how much it is? 95,000. 2 lakh 50 minus 20,000 minus 10,000 minus 6,000 is equal to how much it is? 2 lakh 14,000, correct? 2 lakh 14. Then 1 lakh 80,000 minus 15,000 minus 1,000 minus 15,000 is equal to 1 lakh 49,000, correct? 1 lakh 49. Then 5 lakh minus 80,000 minus 12,000 minus 8,000, 4 lakh, correct? House 4 it is 4 lakh. Then house number 5, 8 lakh minus 51,000 minus 3,750 minus 21,250, correct? 7 lakh, no, okay, 7 lakh 24,000, correct? Then 5 lakh 60% means 60,000, correct? 10%. 5 lakh minus 60,000 minus 1,000 is equal to how much? Okay, 4 lakh 39,000. Now apart from that, house number 3, another 2 lakhs is paid, but NAV cannot be negative. No. NAV can be negative. NAV, net annual value, can be negative. Okay, that point we need to observe once. Okay, that point we will observe it once. Okay, now you see here for house number 3, how much is the municipal taxes paid? 2 lakh. Okay, 2 lakh. NAV can be negative. I guess it is can be negative, no problem. Now we'll see anyhow. Next, okay, and house number 4, municipal tax paid for the advance. In advance they paid. That also you can claim deduction, correct? That also you can claim deduction. Hello. Next, house number 6, all taxes charged by municipality are paid to the extent of 80%. 50% by owner, 30% by tenant. How much owner paid? That much only allowed as deduction. House number 6, owner paid only 50%. Okay, 50% by owner, which means out of 60, actually you can claim deduction only 30, and out of 1,000 you can claim deduction only 500. Once again you calculate 6 lakhs minus 30,000 minus 500 is equal to 5 lakh 69,500, correct? 5 lakh 69,500. Because no, for house number 6, out of the total municipal tax, 80% only paid. But if it is 80, leave it. 50 is paid by owner, 30 paid by tenant. How much tenant paid? Irrelevant. Owner paid how much? Only relevant. Gross annual value minus municipal tax paid by the owner, water tax paid by the owner, all that, correct? So now revised. This is net annual value 95,000, 2,14,000 minus, this is minus 51,000. This is 3,97,000. This is 7,24,000. 5,69,500 are our answers, right? 195 is correct, 214 correct, 51 correct. This is what house number 4. House number 4, municipal tax paid for the financial year 25-26 is 3,000. I think I consider this as advance. Okay. But advance municipal tax is not allowed. That's wrong. Municipal tax is allowed as deduction on cash basis. It's not about advance or arrears. It doesn't matter. To whichever it belongs to, it doesn't matter. You paid in advance, so this point is not correct. This answer is what? 3,97,000. 724 also correct. Now here, did we make, we made a calculation mistake. 5 lakhs, no. From 5 lakhs you should reduce 30. This is calculation mistake. 5 lakhs minus, no. Correct only. Our answer, we considered 4,69,000. You see? Correct only. All the answers correct. 5 lakh minus 30 minus 500. Correct only. 4,69,500. Why we kept that number? 4,69,500. Correct only. Every answer correct. Are you clear? So whether they gave sewerage tax, water tax, whatever it is, all these taxes are allowed as deduction. Understood? That's it. Advanced municipal tax is not allowed as deduction is not correct. In exam, if at all same question comes, what you can do? Maybe in the CMA study material, we will see is there any other question like this. Then we will understand pattern is same or not. Okay, maybe in this question they might have done a mistake. So we don't know. So everywhere, if at all similar treatment they taken, municipal taxes paid in advance, they are not considering. Then for CM exams, we'll do like that. Okay, municipal taxes paid in advance. See, municipal taxes does not have any link with the year. It is allowed on cash basis. How much ever you pay this year, that much is allowed. Are you getting the point? So that's it. It is not allowed on accrual basis. It is allowed on cash basis only. Clear? Next. Oh, now we are starting with deductions concept. Super. No problem. Okay. Now gross annual value they directly gave. Gross annual value they directly gave. Now what is it asking? How much is the standard deduction? 30%, 24. Okay. How much is the standard deduction? Oh, municipal taxes paid is there, nah? First calculate NAV. First calculate NAV. 70, 40, okay, 20, 20, 40. 30% means 21, 12. 30% means 6, 6. 30% means 12. 12, 6, 6. Over. Easy. Next. 48. Wow. Fantastic. They have given super adjustments. Very good. Now tell me, house property. 30% point we understood right now. Okay. 30% point we understood. In house property, you can claim interest. Which interest? Interest on loan borrowed for purchase, construction, renovation, reconstruction, all that. Correct? Huh? So we can claim interest. Again, interest on loan borrowed for repaying the old interest. That is also allowed as deduction. Interest on interest late payment is not allowed as deduction. Can I, if I borrow loan to repay municipal taxes, can I get interest deduction? You can't. Because you will get interest on loan only when the loan is used for house property, construction, purchase, repair, renovation, something. The loan must go to the property improvement. Yes or no? Not for municipal tax payment, not for all other repairs purpose. No. Repair is allowed. Sorry. Repair loan is allowed. Are you clear? No. Fine. Now they are asking, from the following information provided by the SSE, compute interest on loan allowed. We will see. Okay, this much in depth we don't even have in CA Inter also. Okay, we will see. So from this, if at all any new learning is that we will put it as a summary now. Okay. Now interest on loan taken for repair of house property allowed. Okay, this is allowed. So I will do one thing. I will put here, because amounts are same. No, whatever amount they gave, that amount actually allowed. Remember, interest is allowed on accrual basis deduction. There is no link with payment, correct? Huh? And here in house property interest deduction, you will get whether you borrow that for bank and FI, or even you borrow from relative and friends, doesn't matter. Source of borrowing doesn't matter. Under house property, you will get deduction irrespective of any source of borrowing. Remember that. Interest on loan taken for purchasing housing, 50% only paid. No. Fully allowed. Fully allowed. Because accrual basis. You get interest deduction on accrual basis. Interest on new loan taken for repaying old loan, fully allowed. Yes or no? Fully allowed. Next, this also fully allowed. Yes or no? Interest on loan taken for payment of interest on loan earlier. Loan interest on interest to loan interest. No, not allowed. Yes or no? Interest on loan payment for municipal tax, not allowed. Interest on loan by mortgage and house property 3 for business purpose. That's a business interest. Because you took, you know, for business purpose you got the loan, that interest amount you will claim deduction under PGBP purpose, because the loan is used not for purchase, construction, repair, renovation or reconstruction of the property. Correct? Not allowed. This is allowed as deduction in 36. This is allowed as deduction under section 36. This is allowed as deduction under section 36. Interest on loan for reconstruction of HP1 paid outside India without deducting TDS. Oh, TDS not deducted. Interest paid outside India not allowed as deduction. Section 25. There is a section called 25. Okay, that section says interest is not allowed as deduction without deducting TDS. Interest on loan for reconstruction of HP2 payable outside India on which TDS has not been deducted and no payment is yet made. It doesn't matter, because interest on loan you get deduction on accrual basis. Okay, you get accrual basis. Here you see without deducting tax payable outside India. Okay, on which TDS has not been deducted and no payment is made. Here it is already paid amount. Here it is only payable. Payable or paid doesn't matter. interest deduction on accrual. But anyhow, since TDS is not been made, I will not get deduction. I will not give deduction as per section 25. Interest on loan on house property 1 mortgage for renovation of house property 2. Yes, which property you gave security doesn't matter, ma. Okay, I borrowed a loan here. Ultimately, for what purpose? I'm renovating house property 2. You can claim deduction for this under house property 2. House property 2, you will compute income, right? For that only used the loan, right? How did you get the loan? Source of the loan, which one you gave it as a surety security, that doesn't matter. Generally, in a banking loans, the same house for which we are getting loan, the same house will be mortgaged. Okay, so regarding this, technically law is silent on this. Okay, but as a general principles of contract, all that, which house you kept it as a loan and used that money for which house of yours, that doesn't matter. Okay, now look at our answers, right? Okay, this is allowed. Okay, this is note number 1. They are saying second point. What is the note number 1? Interest on loan is allowed on accrual. That's what we thought. Interest on you taken, loan allowed. Correct? D point we thought not allowed. C point, interest on payment of municipal tax, yes, we thought not allowed. Interest on mortgaging house property 3 for business. This must be for 3 as per a section. I mean, the purpose of loan must be repair. Yeah, correct. Which means indirectly it is not allowed because you are using it for business or profession. Therefore, it is not allowed as deduction. Our answer is right. Interest on loan paid outside India, not allowed. Remember section 25. So without deduction, there is no. So it is not allowed as deduction. Okay, here also not allowed as deduction. Interest payable outside India, yes or no? Note number 4. 5 allowed, since loan is used for renovation of house property 2. It shall be allowed as deduction from house property 2. Mortgage of HP1 is irrelevant. This is what I told. Easy or not? So many new points I also learned. See, I know already, but common sense you apply, you get it. Very good. This kind of question should be there for conceptual understanding of tax. CMA book is very good in terms of tax. Like they are structurally building the concepts. Income tax is super. Next, can I proceed further? Okay. Next, calculate interest on loan allowed. Okay, for assessment year 2021 to 25-26. Okay, from the following information. Loan was taken on 1st January 2016, 5 lakh rupees at 12%. Okay, construction commenced. When it started commencement, we don't bother. We only want loan borrowal date. Construction completed on 31st March 2021. So 31st March 2021, that is the date of completion of construction. 2021 is year of construction. Before March means 31st March 2020. This is pre-construction period ending. Yes or no? If construction is completed on 31st March 2021, pre-construction means what? Not that date, right? Pre-construction previous year, that before date 31st March, correct? Next. Okay, now look at okay, what is the loan? 5 lakh, agreed. What is the rate of interest? 12. What is the loan borrowal date? Loan borrowal date is on 1st January 2016. 1st January 2016 till loan PCP date was what? PCP date was 31st March 2020. Yes or no? First time calculating PCP interest. Now what is the period? 16 full year, 17, 18, 19. So 23 months, 48, 51 months it is. Okay, 5 lakh into 51 divided by 12 into 12% is equal to 2 lakh 55,000. This can be claimed as deduction in 5 installments. Divided by 5 is equal to each installment 51. First installment, which year you will claim? First year, when the property came into existence, 31st March 21, which means 2021. Okay, for financial year 2021, nothing but previous year 2021, nothing but assessment year 21-22, you will claim deduction. Yes or no? So previous year 20. So first year is previous year 2021. I will directly call it as previous year 2021. Yes or no? Which is assessment year 21-22. Pre-construction period interest is 51,000. Now remember, this interest amount is calculated only up to 31st March 2020 only. Yes or no? In 2020-2021, loan is still outstanding. But on that, whatever loan is outstanding in this year, 5 lakhs, yes or no, fully into 12%, which is current year interest of 60,000. That also you should claim, correct? 1,11,000. For previous year 2021, 1,11,000. For previous year 21-22, same answer you will get, correct? For previous year 22-23, you will get same 1,11,000. For previous year 23-24, you will get same 1,11,000. For previous year 24-25, you will get same 1,11,000. Now for previous year 25-26, you will get deduction only 60,000. Why 60? Why 60? Because 5 installments are over here. 5 here, 5th installment 6, I mean 51,000 5 times we already claimed 255. So 25-26 will be 6th year from the year of construction. Therefore their PCPI will not come because already claimed. So only current year interest, every year whatever you are incurring on the outstanding loan only you will get deduction. So this point additionally I am giving. Okay, now let's look at the answer. What is the answer? Oh my god, pre-construction period interest. Okay, wait. Since construction started, hence pre-construction period starts from 1st August 2016, and since the construction was completed on 31st March 2021, pre-construction period ends on 31st March, which is actually correct. Okay, our ending date is correct. Now construction starts from 1st August 2016 onwards. Okay, this point we will check once, because generally we calculate pre-construction period interest from date of borrower of loan or from date of construction. Once we will check it out. Okay, we'll open the act and then check it out. Okay, and then make a change accordingly. Yes, you see, pre-construction period related point, where the property has been acquired or constructed with borrowed capital, the interest if any payable on such capital, okay, borrowed for the period prior to previous year in which property has been acquired or constructed, as reduced by any part thereof allowed as deduction under any other provisions of the act, that's okay, okay, shall be deducted under this clause in equal installments of the said previous year and for each of the 4 years, nothing but for that year plus preceding 4 years, nothing but 5 years. Okay, now where the property has been acquired or constructed with borrowed capital, the interest if any payable on such borrowed capital for the period prior to the previous year, interest on borrowed money prior to year of construction means total interest amount only you should consider. Need not be pre-construction period. We named it as PCPI. Okay, technically here you see what are the saying? You see what are the saying? Explanation ma, you see the interpretation. Let us understand this. Where the property has been acquired or constructed with borrowed capital, the interest if any payable on such a capital for the period prior to the year in which property has been acquired or constructed, any loan borrowed for the house purpose, any interest amount that is incurred prior to construction will be allowed as deduction in 5 installments, they said. Any interest incurred means, any interest payable on loan borrowed means, should I take loan, should I compute interest amount from borrowable data, construction begin data, to know accurate amount of interest I incurred, how much interest I incurred, will interest expenditure I incur only from construction data, borrowable data, borrowable data. Banks have a common sense also. Today I gave loan, tomorrow you will not start spending. It will take time, no. You gave amount now only I'll go and purchase all the material and then I will start Senkustapan and then I will do construction. So here their answer is wrong. You know what they did? What they did is, you know, since loan borrowable date is 1st January, whereas construction was started on 1st August, this approximately 7 months interest, no, they ignored it. As per the explanation, they never say from which date you should calculate interest, but they indirectly gave a hint. Before year of construction, before year of purchase, any interest amount payable on the loan borrowed, they said. Any interest payable means what? I will have to pay interest from borrowable date. Are you clear? Yes or no? So loan was taken. So technically 1st January is correct as per the act. But in the book, since they have taken only from construction starting date, since they have taken in the book construction starting date, we will also stick to the same logic. Construction starting date, we will stick to that. Maybe there might be some case laws judgments would have been there on that. Ignore it, because in CMA book they have started from construction beginning date. Able to understand? In reality, I will tell you, whenever we borrowed the loan, from that day we will start claiming deduction capital, because even the provision was so clear. Interest payable prior to year of completion of construction. So in which year you completed construction, ignore that. Prior to that year, whatever interest is there, that interest you can claim it as deduction in 5 years. Correct? So now some courts, some judgments or some assessing officer might say I will give deduction only from construction starting date onwards. Only then you started using loan for the property purpose. Until then you might have just kept it idle, so I will not give deduction. That is one argument. Another argument is what, sir, the moment bank gives a loan, I have to search, no, I have to find raw material, I have to find people, I have to find everything. Before I get a loan, I'll be uncertain. What if I talk to everybody and entered into contract, but suddenly bank defaulted me, they did not give me loan, I will have to default contract liability. So I did not talk to anybody until I get a loan. So only after I get a loan, then I spoke with everybody. It took time. Able to understand? So it's a genuine, that 7 months you cannot say customer wasted, the borrower wasted money, you cannot say that. That was a genuine cause. Able to understand? That's it. So now let us assume, let us discuss from their angle. Okay, from 1st August let us compute. From 1st August let us compute. Now 1st August means 7 months gone. 51 minus 7 is equal to 44 months only you should calculate interest, correct? So 2,20,000, correct? 2,20,000 divided by 5, 44,000 I'm getting interest. What is it? 44,000 I'm getting interest, correct? We'll see what answer they are getting. By the way, up to 31st March 2020. Hey, did they give any repayment? Oh, wait. They repaid a loan. Oh, yo, we forgot to consider the repayment. Amazing problem. Repayment also made. When they repaid loan, you know, appa, 1 lakh they repaid on 1st April. So much complication this problem. Again 1st April 2020 they repaid another 1 lakh. So technically on or before 31st March 2020 1 lakh only repaid. Now, oh super. Now fine, you see, now we need to calculate so carefully. From when the construction commencement date 1st August 2016 to 31st March 2017, you are having outstanding loan of 5 lakh. You see here, oh, so cleverly they did. Because 1st April 2017 1 lakh you repaid, which means 1st April 2017 to 31st March 2020 4 lakhs is only outstanding, correct? Now calculate interest. 5 lakh multiplied by, so you need to read the question always till the end and then only start, because I didn't expect repayment information will be given, because till date in our CA Inter there is no repayment concept discussion. Fine, it's okay. So here 9 months interest, correct? Into 9 divided by 12 into 12% is equal to 9 by 12 into 12% is equal to 45,000. Then here it is 18, 19, 20, 18, 19, 20, 3 years only, yes or no? 36 divided by 12 into 12% is equal to 48,000 into 3 is equal to 1,44,000. So total interest 1,99,000, correct? Divided by 5, 37,800 is the PCPI installment. 1,89,000 it's coming. Sorry. 1,89,000. 1,89,000 divided by 5, 37,800 interest we are getting per installment, correct? By the way, did they repay any other loan? Thank God they didn't repay that. Okay, on 1 lakh they repaid, so which means outstanding amount is 4 lakh. What is the amount here? 36,800 they are getting a PCPI. How it is 36,800? 1 minute, did we miss any other information again here? 5 lakh is the loan taken. 1st August onwards only they started, correct? Okay, so by the way, 1st August means how many months? 8 months, no? 8 by 12, it is not 9 by 12. 1st August onwards it is 8 by 12. April, May, June, July gone, no? Yeah. So what is the amount? How much it is? So 1 lakh, 1,84,000. 1,84,000 divided by 5, 36,000. Correct only, but we just took here 9 by mistake. Count always carefully. Okay, next. That's it. And current year interest is how much? Because 2021 another 1 lakh he repaid. Means on 2021, you know, current year interest will be on 3 lakh. 3 lakh multiplied by 12% is equal to 36,000 current year. PCPA will be 36,800. So total 72,800. Then 21-22. Did he repay another loan? 21-22? No. 21-22 same amount 72,800. Okay, so 36,000 current year interest, PCPI interest 36,800. 22-23 same, current year interest is 36,000, PCPI interest is 36,800. Okay, so 72,800. 23-24 they repaid one more lakh, so which means loan outstanding is 2 lakhs only. Okay, into 12% is equal to 24,000, whereas PCP 36,800, which is equal to 60,800. Then 24-25 did they repay another amount? Oh, 1st July he repaid. 24-25 1st July. So as on 1st April 2 lakhs outstanding is there. 3 months multiplied by 12% is equal to 6,000. Okay, then again 1st July he repaid 1 lakh. So outstanding loan right now is again 1 lakh. 1 lakh is there for 9 months is equal to, okay, 9,000. Totally current year interest 15, PCPI interest for that year 36,800. 51,800. Let us see. Correct? Thank God. They gave repayments here. We forgot to consider repayment at the first time when we are solving. So read the question always full. Repayment clause is there. So you need to be very careful. Here, there is only one point. I won't say we are wrong. Okay, because we are right. As per the act also our analysis is right. But CMA Institute study material, they are considering only from construction beginning date for PCPI purpose. Technically, that is not as per the law. As per the law, whatever the pre-construction period interest that you are incurring, that you have to claim. That's it. That's it. Next. Can I proceed further? Then illustration 50. Illustration 50. Okay, just a minute. Okay, so we'll take a break and get back and then we'll start. Okay, we'll start. PGBP also will start this. Okay, now itself. That's it. Once is over, PGBP will start. So now let's continue. 50th question. So she has 2 house properties. Both are let out. Okay. Now what is they're asking? Compute income from the following details. Okay, they're asking literally compute income from house property. And if you see other information, loan taken for construction is still unpaid, means loan is fully outstanding. Last point, municipal taxes for house 1 is still not paid, while house 2 is paid half only paid. House 2 is half paid by tenant. Okay, that of house 2 means remaining 50% is paid by owner. Correct? Okay, remaining 50% is paid by owner, while that of house 2 is half paid by tenant. Okay, suppose if the sentence is for house 2 only half is paid by tenant. If that is the case, then owner did not pay anything. What does they say? House 1 is unpaid, while that of house 2 half is paid by tenant, means remaining half is paid by owner. That's the meaning out of the sentence I'm getting. Okay, fine. Next. Now gross annual value. Okay, so municipal value or fair rent, whichever is higher, standard rent. This is step number 1. Correct? Whereas here this is step number 1. Correct? That's it. For house 2, step number 1 is that. Actual rent receivable is this. Okay, actual rent received is 92,000, whereas here it is 1,72,000. Vacancy point is not there. Okay, vacancy point is not there. Therefore, whichever is higher, gross annual value for this is 92,000, whereas here it is 2 lakhs. Are you clear? Okay, so now, so gross annual value. So gross annual value will be here 92,000 and there it is 2 lakhs. Correct? Minus municipal taxes paid. And we know the problem clearly mentioned that for house 1 it is 0. For house 2, how much is the municipal tax? 1,000 rupees. 50% paid by tenant, which means 50% is only paid by owner. Correct? Therefore, this is 92,000 net annual value. This is 1,99,500. This is net annual value. Correct? Minus 30% deduction. How much it is? 92,000. 90,000 into 30% is equal to 27,600. Yes or no? Whereas here 1,99,500 into 30% is equal to 59,850. Correct? Now interest on loan. Second deduction is what? Interest on loan. You can claim interest on loan as on accrual. Fire insurance irrelevant, repairs irrelevant. Interest on loan 10,000 and nil. That's it. Correct? 10,000 and nil. So therefore income from house property is 92,000 minus 30% minus 10,000 is equal to 54,400. 1,99,500 minus 59,850 is equal to 1,39,650. Total income from house property is equal to 1,94,050. What is the answer? That's it. That's it. Next, now they're asking, now the problems are going to start from self-occupied property. From here the problem complication will slightly increase. Okay, Mr. Pandey is owner of 3 houses in Chennai. Furnished the following information. Compute his income from house property. Oh, all the 3 are self-occupied. Oh my god. Okay, all the 3 are self-occupied. Okay, now when all the 3 are self-occupied, we need to have 3 options. Any 2 houses only, he can claim it as SOP, NAV is equal to 0, and further calculations. Okay, by the way, he has opted for old regime. Only when self-occupied property issue comes, tax regime we need to check out. Yes or no? Yes, because no, in case of default tax regime, for self-occupied property you cannot claim interest deduction. For a let out property, default tax or optional tax doesn't matter, you can claim interest deduction as per whatever the interest incurred. Correct? Again, under optional tax regime, for a self-occupied property where NAV is equal to 0, benefit is claimed, maximum interest allowed is 2 lakhs, that too if the interest is for purchase or construction. If it is for some other purpose, the maximum interest allowed is 30,000. Correct? Now, so first option 1, house 1 is SOP, house 2 is SOP, house 3 is DLOP. Option 2, house 1 SOP, house 2 DLOP, house 3 SOP. Option 3, house 1 DLOP, house 2 SOP, house 3 SOP. Like this we need to compute in these 3 options and then we have to figure out. Correct? Now, you know, first I will figure out as if this is a let out property. Remember, I assume that it is a let out, deemed let out. For a deemed let out property, gross annual value is nothing but fair rent, nothing but expected rent. Sorry, not even fair rent. Step 1, expected rent. Hello, what? Expected rent is what? GAV. Expected rent means what? Fair rent or municipal value, whichever is higher, maximum of standard rent. Okay. Now, in this case, you know, step 1 will be this one. Here in this case, step 1 will be no. Step 1 will be this only. Step 1 will be this only. Whereas in this case, again step 1 is also restricted to standard rent. In all these 3 cases, standard rent itself came expected rent. GAV. Correct? Now, first option. Now look at. Just a minute. Yeah. Now first option. Okay. House 1 SOP. Okay. House 2 SOP. House 3 DLOP. Okay. Now I will put format GAV minus municipal taxes paid, NAV minus 30% deduction minus interest on loan. Correct? Then what I will get is answer. Okay. Now look at. So I'm taking any 2 houses as SOP, the other one automatically DLOP. Now automatically if it is DLOP, gross annual value is 18 lakhs. Correct? 18 lakh. Okay. Whereas here the point is not applicable. No, because when I say SOP, I can directly claim 0. Yes or no? Now you see municipal taxes paid only they gave, you see. Okay, paid. How much it is? Nothing is mentioned. Therefore there is no municipal tax paid. Oh no. Sorry. They mentioned percentage. They should have mentioned here the percentage. No, if nothing is given, there is a chance that student might take 0. 10% of municipal value they said, which means I will put the amounts here. Okay, municipal value 20,000, 1,30,000, and this is 1,35,000. Yes or no? This is the municipal tax paid. So here alone 1,35,000 I will consider. Am I right? Minus 1,35,000 is equal to 16,65,000. 30% is what? 4,99,500. Here not applicable. Whereas interest is there 90,000. Remember, interest is for purchase. Loan is taken in 21-22. For property where NAV is equal to 0, maximum interest claimable per house is 2 lakh. That too, total SSC wise for entire SOP is put together, maximum how much you can claim? 2 lakh. That's it. So 90 plus 170. Here how much it is there? 90,000 you claim, and balance here 1,70,000 is there. Yes or no? But put together restricted to 2 lakh. Yes or no? So put together the minus answer will be 2 lakh. Yes or no? Now here actual interest for this how much? In this case how much actual? 1,65,000. Correct? 1,65,000. Therefore 16,65,000 minus 4,99,500 minus 1,65,000 is equal to 10,500,000. Correct? Set off minus 2 lakhs is equal to 8,500,000. Option 1 answer is this. Correct? Next, option 2. What is this? House 1 SOP. Yes or no? House 2 DLOP. House 3 SOP. Correct? Now again, gross annual value minus municipal taxes paid and net annual value minus 30% of NAV and minus interest on loan. Correct? Now for this not applicable, not applicable. Therefore NAV is equal to 0 directly, whereas in middle. Okay, again here it is not applicable. Interest on loan 90,000 they have given here. Yes or no? 90,000 they have given. Here it is 1,70,000 they have given. Here it is 1,65,000 they have given. Are you clear? Now balance answer I will have to compute. Okay, first I will compute, whereas these two put together I will restrict it to 2 lakhs. I will restrict it to 2 lakhs. Okay, now DLOP, what is the gross annual value? 15 lakhs. DLOP, what is the gross annual value? 15 lakh. Now how much is the municipal taxes? 1,30,000. Correct? We computed. So 13,70,000. Okay, 13,70,000 into 30% is equal to 4,11,000. Correct? What is income from house property? Minus only for second house. Only for second house the answer is 7,89,000. And remember, for this third house, you know, maximum interest you can claim deduction is 2 lakhs. Therefore I will restrict this amount to 1,10,000 only. Correct? I will strike this and substitute 110. Therefore 2 lakhs negative. Correct? Now therefore net income is 5,89,000. Option 2 answer is lower income than option 1, which is better option, option 2. Let us see option 3 also. If at all option 3 is also lower than option 2, then option 3 will be the answer. Otherwise option 2 is the answer. Correct? Next option 3, house 1 DLOP, house 2 SOP, house 3 SOP. Correct? Now gross annual value minus municipal taxes paid, then what you get is net annual value minus 30% minus interest. Correct? Yes or no? Now for this one DLOP house 1, 1,50,000 only. Yeah, so lesser amount, 1,50,000. Yes or no? Now whereas here not applicable, not applicable, not applicable, not applicable. Municipal taxes paid is 20,000 for house 1. Correct? 20,000. I forgot to put I wrongly put bracket. Okay, yeah. Next 1,30,000. 30% means what? 39,000. Correct? Then interest on loan is 90,000. Correct? Hello. Now next whereas this one, how much is the interest? 1,70,000. Maximum interest I can claim here is 30,000. Because 165 is there, but I will restrict. Both put together 2 lakhs answer negative. Now whereas here 1,30,000 minus 39,000 minus 90 is equal to 1,000. In fact in this option the answer is coming negative, which is even more best option. Yes or no? So option number 3 in our book, nothing but which house is to be treated as DLOP? House 1 is better to treat it as DLOP. This is the answer. House 2, house 3 SOP. The answer 1,99,000 negative. That's it. Option number 2. Oh, they didn't do option number 2 value. Computation of house property, option number 2. Working. What are they asking, by the way? Compute is income from house property. Sorry, I mean they didn't do options. 2 options, no? See, you said house 1 deemed to be let out. Okay, they directly gave the answer without checking options. Okay, all the 3 options they gave. Okay, fine. I think the assumption would have been you try remaining 2 options. You will understand that house number 1 DLOP is best option. So that's it. Okay, fine. Our answer is correct. We finally decided what? House 1 is to be DLOP. This is the answer which we decided. Correct? Next. Next. Oh my God. So much is there. Fine. It's okay. Sri Jayaram has a house property used for own residence for 9 months, and for remaining 3 months for the previous year it was unused. Okay, unused means nothing but vacant. Vacant. Okay, 9 months it was occupied. Okay, self-occupied and vacant, remaining 3 months. Nothing but throughout the year it was not rented. Remember, throughout the year it was not rented, which means NAV is equal to 0 can be claimed. NAV is equal to 0 can be claimed. Now, municipal value of the property 6 lakhs per annum, fair rent of the property 5 lakhs, standard rent 4 lakhs. This information is irrelevant. Why? Because NAV is equal to 0. He incurred repair expenditure of 10,000, irrelevant. Municipal taxes paid, irrelevant. Compute income from house property in the following cases. Okay, so totally they have given 7 cases. NAV is equal to 0 minus interest, how much ever comes, that's the income from house property. Negative income it will come. First one, he borrowed 1 lakh on 1998, 1st April 1999 before, for purchase of the house, and such amount was still unpaid. Such amount as well as interest. So 1 lakh into 12%, that's it. You can claim 12,000 deduction. Yes or no? Whatever deduction you are claiming, that itself is income from house property. Yes or no? Here 1998, 10 lakhs multiplied by 12%, 1 lakh 20 he incurred in the current year interest. Entire amount is still unpaid, remember. But since loan was borrowed before 1/4/1999, where NAV is equal to 0, maximum interest deduction is 30,000. Maximum deduction is 30,000. Again here, loan was borrowed on or after 1st April 1999. Yes or no? And remember, he borrowed 5 lakhs and 12%, and construction of the house property was completed on 31st March 2000. Construction was completed within 5 years from the end of the year in which loan was borrowed. Okay, so loan was borrowed on or after 1/4/1999. Construction was completed within 5 years. 3, moreover, construction was in, okay, and it is for the loan is borrowed for purchase or construction purpose. Therefore, maximum 2 lakhs will apply. Maximum of 2 lakhs. Now, actual interest is 12%. Therefore, entire 60,000 he can claim. Maximum interest is 12%. Maximum interest is 2 lakhs. But here they incurred only 60,000, so he can claim. Correct? Then he borrowed 20 for construction on or after 1/4/1999, and house property construction was completed on 31st March. Okay, 20 lakhs into 18%, total 3 lakh 60, but restricted to maximum 2 lakh. Because all the 3 conditions satisfied, maximum higher limit 2 lakhs we can claim. Then he borrowed 1 lakh 80 at 15% on 1/4/1998. Okay, that too further borrowed 10 lakhs on 17th August 1999. Oh my goodness. And construction of the house property and such amount is okay, for construction is completed. Okay, remember, construction is completed on or after within 5 years. And here there are 2 loans borrowed. Second loan we will consider. First loan, how much it is? 1,80,000 into 15%. Okay, that is 27,000 we are getting. 10 lakhs into 10%, how much it is? 1 lakh. So original loan borrowed amount, maximum limit 30. Subsequent loan borrowed amount, maximum limit as a whole together 1 lakh. 2 lakhs. 1 lakh plus 27,000. I think 127 I will claim. I will go with this logic. I will claim total 127. Before 1st April related loan, maximum limit is 30. If at all loan is taken on or after 1st April, further maximum limit is 2 lakhs. Okay, but both put together maximum reduction is 2 lakhs. Correct? This I am little doubtful. Okay, so I am going with this logic. So minus 1,27,000 is the answer. Okay, I am going with a bit doubtfully, but still I am taking a choice, and then okay, all this. Next, he borrowed 5 lakhs at 12% for repairs. Repairs means maximum limit is what? 30,000. 12 5s are 60,000 you will get, but maximum answer is 30,000. Then he borrowed 1 lakh 80 at 15% on 1998. He further borrowed 20 lakh at 14% on 17th August 1999 for construction, and construction is completed within 5 years. No problem at all. Yes or no? 20 lakhs into 14%, which is 2 lakh 80, plus 1 lakh 80 into 15%, which is 3 lakh 7. Maximum restriction is 2 lakhs. So this is also little I am doubtful. Okay, these two I am doubtful because what interpretation they have taken we are not sure. Okay, now look at. Say whatever I said they took. That's it. All the answers correct? No? That's it. Okay. Now here, if a loan taken before 1999 as well as after 1999, then total interest allowed cannot exceed 2 lakh. This is what interpretation I also made. However, the limit of interest allowed in respect of loan taken prior shall be 30. Since it is 27, it is within 30, we consider entire 27. Suppose if it is more than 30, 40,000, then we will restrict to 30. Then after 1/4/2019, if at all it is whatever is that amount I'll take. Both put together I'll round up to 2 lakhs. New learning. Yes or no? We did not see this point in our CA Inter. We did not even discuss this in our class also. It's a very new point. Correct? Literally, the subject grassroots level we are understanding because of CMA problems. Correct? Very good actually. Next. Understood until now? Yeah. Just 1 minute. Yeah. Next one. Illustration number 53. Rent-free accommodation was a self-occupied. That's okay. Okay, this is regarding, it's a very good question actually. What is this? I'll tell you. Miss Anjali owns a house property which is let out to her employer company for a monthly rent of 20,000. Through the company where she is working, to them it is rented for 20. The company allotted the same house to Anjali again as a rent-free accommodation. You should calculate in 2 parts the answer. 1, she is getting RFA from company. Okay. That unit comes considered as an RFA given by the company. For company it is a rented accommodation, and therefore it is 10% of salary or actual rent paid by the company, whichever is lower is a taxable perquisite for her. And on the other hand, she is renting it to the company, which is a let out property. So you have to compute. Now here the point, the crux is what? Because she is staying in his own house only. She is staying in her own house. She can say that it's a self-occupied property. I will claim NAV is equal to 0. There are 2 conditions if you want to claim NAV is equal to 0. 1, you should not rent it throughout the year. You should not at all rent it. She rented it. Sir, I'm only staying. No, I didn't rent, sir. I'm only staying. You are getting a benefit of 20,000 per month from company. Every month you are getting rental amount, which means you are deriving benefit. Even though you are only staying in your own house, though it is a self-occupied property, dictionary meaning point of view, but legal point of view, it is not a self-occupied, it's a let-out property. You rent it to the company. Later again, you are staying in the same house. In the capacity of employee, you are staying. You are not staying in the house as a owner. You are staying in the house as an employee of the company. You may be the owner. You are getting rental amount from the company because you are a owner of the property. But you are staying in the house, right? You are not staying in your original capacity. You are staying as a employee. I may be a husband at home, but I'm a director in a company. Capacities will vary. Are you clear? Exactly. Next. Now look at. So now here, so ultimately it is treated as what? Let out property. It is treated as what? Let out property. Okay, so monthly rent is what? 2 lakh for, gross annual value 2 lakh 40. Straight question, no much. Municipal taxes paid 20, remove it. So 2 lakh 20, net annual value 30%, 66. Interest on loan paid how much? 90,000. Now here they didn't mention purpose of the loan. I assume that it is purchase or construction. Sorry. For a let out property, I don't have to look at the purpose. Purpose of the loan, when should I look at? NAV is equal to 0. That time I should look at purpose of the loan, purchase or repair or all that. Here it's a let out. I don't have to worry. House property related loan, on that interest I paid. That's it. Whatever I paid, I'll get deduction. That's it. The income from house property is this. Correct? Further, she's getting the house as a RFA right from the employer. The same is treated as perquisite in her hands. And since the house is where, for example, the location of the house is not mentioned. If it is more than in a city more than 40 lakh, then employer is providing, right? Perquisite value will be 10% of salary or rent which company paying, whichever is lower. That's it. Next, are you clear? Then compute income from house property of Sri from the following information. Oh, they have 4 houses and 3 houses are self-occupied. 1 is own business. When it is used for own business, that house will no more come under house property scope. This particular house will be shown as a fixed asset building in the business block of asset. Correct? And we will claim depreciation on that. Whereas 3 houses, option scheme again. We have to find out options. Okay, same, just like how we did option 1, option 2, option 3, same. Now here I will first see, step number 1, this one. In this step number 1 is this only. Okay, in this step number 1 is 7 lakh. Correct? No. Here also step number 1 is very good. 3 lakhs. Here step number 1 is 2 lakh. In third house step number 1 is 7 lakh. Expected rent I'm calculating. Understood? Now let us look at same option scheme. I will go first option number 1. Okay, house 1 DLOP, house 2 SOP, house 3 SOP. First I will put a format. In exam also you should do the same. Okay, 30% of NAV minus interest. Now look at Now look at house 1. Okay, now house 1 DLOP, right? So what is the gross annual value? 3 lakh. For house 2 and house 3 not applicable, correct? Not applicable, not applicable. Whereas house 1 municipal taxes paid how much? Oh, 15% of municipal value. Oh, by the way, wait, here any in the given case. Okay, solution, find the answer. Okay, old regime, fine. Now I think everything is given. Oh, loan, you see, loan borrower here, very careful. Okay, loan borrower here is also there. Now 15% of municipal value is what? 45,000 municipal taxes paid. I assume that it is paid. I assume that it is paid. They didn't mention paid or payable, so I assume that it is paid. If nothing is mentioned, we assume that it is paid. Now here 15% of 2 lakhs, 30,000 is the municipal taxes. Here 15% of 7 lakh, 7 into 15, 105, 1,05,000, correct? Now that's it. This I will ignore because house 4 is business purpose. Municipal taxes paid will be claimed as deduction in PGBP. Understood? And since it's a tax item, 43B logic will apply. Only if it is paid on or before due date for filing IT return, only they will get deduction under PGBP, correct? Next, so 45,000, correct? Now net annual value 2,55,000, 2,55,000 into 30% is equal to 76,500, 0. Now interest, repairs, ground rent, land revenue, irrelevant details, yes or no? Next, actually ground rent means what? Ground rent means probably rental income for related to some land. That is one option. Or ground rent means probably she's owner only for the house, but for the ground on which the house is standing, rent paid for the ground. Even then it is irrelevant, correct? Next, interest on loan, how much? 40. But remember, loan is borrowed before 1/4/1999. Maximum interest will be 30,000. Wrong. That logic will apply when NAV is equal to 0. Here we did not claim house 1 DLOP. We thought loan borrowal date irrelevant for us. Yes or no? Entire 40 I will claim, correct? Yes or no? So 2,55,000 minus 30% minus 40,000 is equal to 1,38,500. Now house number 2, 9899, interest is 10. Maximum also you can claim 10, 30 only. So 10,000, correct? Then house number 3, oh, 2,10,000. But since it's a self-occupied property, maximum you can claim how much? 2 lakh, but restricted to 1,90,000. So restricted to 2 lakhs negatively, correct? Therefore the answer is negative 61,500. Income from house property is 61,500 negative. Agreed. Option 1. Hello. Then we need to do option number 2. Okay, now what is option number 2? House 1 SOP, house 2 DLOP, house 3 SOP, correct? Now again, gross annual value, municipal taxes paid, net annual value minus 30% minus interest on loan, correct? Yes, interest on loan. Now look at the answer. Okay, DLOP first I will compute for that. How much it is? 2 lakh. Okay, gross annual value is 2 lakh. For a deemed let out property, expected rent itself is gross annual value. Agreed? No, municipal taxes paid is there na. For second house how much it is? 30,000 ma. Municipal taxes is 30,000. So net annual value is 1,70,000, 0. So 30 means 51,000, correct? Then interest on loan 10,000 is there. 10,000 you can claim for that, you need not worry. Okay, and here loan was borrowed before, loan was borrowed, remember this, loan was borrowed before 1/4/1999. NAV is equal to 0. Therefore maximum interest is 30,000. Whereas here how much you can claim? 2 lakh 2,10,000 is there, but restricted to 1,70,000 because 30 already claimed. Oh, loss here 30, and here it is 1,70,000, and here it is 1,70,000 minus 51,000 minus 10,000 is equal to 1,09,000. Set off minus 1,70,000 minus 30,000 is equal to 91,000. Now suppose if two options have loss only, net result, higher loss amount we should take. If income is lower, that option is best. Loss case, loss is higher, that option is best to show department, correct? See, typically here there is no income, there is no loss also. These are all calculations based on numbers given. Typically am I incurring loss and profit? No. Clear? Next. Now option number 3. Okay, house 1 SOP, house 2 SOP, house 3 DLOP. Okay, gross annual value minus municipal taxes paid, net annual value minus 30% of NAV minus interest. So house number 3, what is the amount we thought? 7 lakhs we thought as step number 1. Correct? 7 lakhs we thought step number 1. Now municipal taxes paid is 1,05,000. Correct? 1,05,000. So the answer is 5,95,000. Net annual value 0, 0. 30%. 5,95,000 into 30%. 1,78,500. 0, 0. Now here maximum restriction is 30, whereas here maximum restriction is second house 98, 99. Okay, anyhow it is within this one. But remember, since both the loans are borrowed before 1/4/2019, both the loans are borrowed, maximum section limit is also 30. If any one loan is on or after 1/4/1999, then section limit would have been increased to 2 lakhs. But since here both the loans are borrowed before 1/4/1999, both the limits put together 30. Now here minus interest, how much here it is? Actual interest you can claim. Sorry, 2 lakh 10. Remember, this is deemed let out. So no need of limit application. Correct? So the answer 30,000, and here it will be a positive. Anyhow, second option will be the best option for us, to best of my knowledge. Okay, 2,06,500, 1,76,500. If I go with this option, I'm getting a positive income. If I go with the house number 2 as DLOP, I'm getting negative 91. If I go house 1 as DLOP, negative 61, because here the income is lowest. Income is lowest in option number 2, where house 2 is DLOP. Answer. Oh my god, how did they give? Did we compute it correctly? Option 1. Option 2 is what? House 1 DLOP. Option 1 is what? House 2 DLOP. And they said how option 2 is only, house 2 is only DLOP. That is correct. But why we got negative? I mean, why we got something else answer? House 2 DLOP. You see how they said house to DLOP. 2 lakhs correct, 30 correct, 51 correct. Interest on loan 1 lakh. Interest on loan 1 lakh. What is the interest on loan for house to? 10,000, no? House to interest is how much? Hello? See? 10. Then why they took 1 lakh here? That's the wrong. That's why 90,000 difference we got. So our answer is right. Okay? They gave a wrong answer here. So it's actually interest, how much it is? 1 lakh. Correct? Okay, which means here they will get 51,000 only income. Correct? No, 61 or something. Here they will get 90,000 extra income. They showed 90,000. So actual loss is only 91,000. For us we got how much it is? 91,000 only we got. Are you clear? They took wrongly interest amount 1 lakh in house number 2. In the question it is only 1,10,000 which is given. Correct? That's it. Remaining options, our answers are correct. Lowest option, house 2 DLOP, is the best option. Correct? So what is the best option? Option best is what? Did they give conclusion? I think final answer they gave no. That's why. Final answer they gave no. So total income, therefore from house property, option 1 is this one they said. Actually for us it is 91. That's it. That option only correct. Correct? Yes. Next. So finally they declared that option as income computation. Okay, income computation logic. You see, they considered interest as 1 lakh. Actually they gave in the question 10,000. Therefore it is 91,000, which is what our answer is right. Easy. Next. Illustration number 55. Just 2 minutes. Yeah, we'll continue. Yes. Miss Paro has house property having 2 separate units. So remember, it's a single property but has 2 units. Okay. Unit A covering 40% of total area. Unit B covering 60% of total area. Unit A is self-occupied by SSE. Unit B is let out to Devadas for a monthly rent of 3,000. Okay. With following further information, compute taxable income and old regime. Okay. Now look at unit 1, unit 1, unit 2. Unit 1 self-occupied property, let out property. And remember, if unit 1, unit 2, unit A 40, they gave area 40% area, unit B is 60% area. By the way, unit A self-occupied, yeah, unit B is let out, correct. Okay, now format as usual, GAV minus municipal taxes paid minus NAV minus 30% of NAV minus interest on loan, correct? Yes or no? Now let out property 3000, municipal value 1 lakh, fair rent 1 lakh 20. Remember, this is for full property. Okay, you should only take 60% portion. How much it is? 60,000, and this is for assume as opted with the following further information, correct? And this is 72,000 plus this is 1,20,000. So step 1 for a let out portion is 72. Yes or no? And actual rent is 3,000 into 12, 36,000, whichever is higher. 72 is the gross annual value. Yes or no? Whereas for unit 1, SOP 0. Municipal taxes we don't consider. For unit 2, municipal taxes 10% of municipal value. Municipal value is 60,000 into 10%. How much it is? 6,000. Correct? Next, 0. So 66,000. 30%. 66,000 into 30% is equal to 19,800. Now look at interest on loan. Okay, 40:60 ratio. 12,000 here, 18,000 there. Correct? Next, so negative 12,000. You see, I'm solving for the first time all the problems. Still I'm accurately solving only because provision I am so strong. Okay, application, if you know correctly, any number of problems, new problems, you can still solve it. Next up, 68 minus 19, okay, 28. Negative, sorry, net 16,200. Answer. Correct? That's it. That's it. Okay, so the answer is 16,200. That's it. Next, illustration 56. Rana used his house property for self-occupation till 1st August and let out the same for remaining period. It's only one house, one unit. Part of a year self-occupied, part of a year let out. I cannot claim NAV is equal to 0. So I will have to compute GAV. When I compute GAV, I should do it for ownership period 12 months. Whereas actual rent, I will take only for let out period. Yes or no? Next up. So remaining months, he let it 4 months self-occupied, 8 months let out. But entire 12 months put together only, we should compute GAV, all that. Compute income from house property. First I will compute gross annual value. Gross annual value is equal to municipal value 1 lakh, fair rent 80, whichever is higher, restricted to 96,000, which is step number 1. Step number 2, 8 months into 6,000, 48,000 only actual rent receivable. 8 months rented into 6,000 per month receivable minus unrealized rent 0. Received is 48. No vacancy. Therefore, step 1 or step 2, whichever is higher, gross annual value is equal to 96,000. Agreed? 96,000 minus municipal taxes paid, whatever actually paid, that much. How much is actually paid? Municipal tax 16% of the municipal value, which is 16,000. Yes or no? Therefore net annual value 80,000 minus 30% of NAV, which is 24,000, minus interest on loan. How much is the interest on loan given? As usual, whatever interest is there, that much, 10,000. Even if it is 2 lakhs, 3 lakhs, doesn't matter. 34, which means 46,000 is the income from house property. Answer. What's the answer? That's it. You see how easy? Next, illustration 57. Oh my god, so much is there. How shall your answer differ if in the above illustration property is let out to tenant from 1/4 to 1st December and from 1st December to 1st December 1st December to 1st March it was self-occupied? Answer remains almost same. No. Because rental amount changes. No. Standard rent, okay. One more change is there. Standard rent, let us assume 50. Oh, then step 1 will be 50. Then step 2 you should see. Step 2 you should see. Okay. And if you see 1st April to 1st December let out means 8 months it was let out. 8 months into 6,000, 46,000, 48,000 is receivable. Okay, this itself is received also. And if you observe, from 1st December to 1st March only it was self-occupied. What about March month? I assume it is vacant. I assume it is vacant. If March month is not vacant, I will get another 6,000, where my step 2 would have been 54. My step 1 is right now 50. Original step 2 is less than step 1. If at all vacancy is not there, step 2 is higher. Therefore, GAV is equal to 48,000. GAV is equal to 48,000. Correct? GAV is equal to 48,000, and municipal tax paid as usual 16,000, 32,000 into 30%. Correct? 30%, 9,600. Interest on loan as usual amount. Yes or no? 32,000 minus 30% minus 10,000. The answer will be 12,400. I hope this is correct. Oh, super. You understood. Standard and restricted to 50. Therefore, step 1 will come to 50 automatically. Oh, again, merger of case 1, case number 3, area and time wise division. If you leave it, okay, I'll directly solve. Next, Mr. Aznabi has a house property in Cochin. The total house property has 2 equal dimension residential units. Unit 1 is self-occupied throughout the year. Unit 2 is let out for 9 months. Simple. At the end of it was let out. It is let out. Just a minute. Yeah. So unit 2 is just a minute. Yeah. Now unit 2 is let out for 9 months for 10,000 per month, and remaining 3 months it is self-occupied. So which means there is no vacancy in unit 2. Remember. Compute the taxable income from. He has opted old regime. Municipal value, all that is given. Okay. Municipal value 2 lakhs for the property. Yes or no? 2 lakhs. Only for unit 2 it is 1 lakh. Fair rent only for unit 2 80k. Standard rent only for unit 2 1.5 lakh. Okay. Municipal tax 10%, 60% only was paid by SSE. Remember, municipal value is how much? 2 lakh. I mean, only I will only take for let out portion. Okay. 10% means 6,000. 6,000 into 60% means related to this, how much I paid? 3,600. No. No. 3,600. See, remember. No. For let out portion, municipal value 1 lakh. Only for let out portion. Listen to this. You will tell. Only for let out portion, municipal value is 1 lakh. See, total municipal value 2 lakhs. Let out portion 1 lakh. 10% means 10,000. But 60% only paid 6,000. Okay. 6,000 is municipal taxes paid for let out portion. Now look at. You know why? I'll do it here itself. Okay. Okay. Now unit 1, unit 2. Correct? Now unit 2 let out. So 000. Unit 2 let out. Yes or no? Let out means what? 1 lakh. Step number 1. Step number 1 will be 1 lakh. Okay. Step number 2. How much is the step number 2? 90,000, because 9 months it was rented and there is no vacancy. Whichever is higher, 1 lakh. So 1 lakh. Correct? Municipal taxes paid, we computed 6,000. 94,000. 30% means what? Okay. 28,200. Yes or no? Interest on loan amount. Interest on loan is what? 40,000. Correct? We have to claim deduction equally. Total property. Yes or no? Total property interest is 20. 20 here, 20 there. Expenditure on repairs is irrelevant. Yes or no? Next. So minus 20,000 and 45,800. Set off 25,800. Are you clear? That's it. And by the way, if at all some of you feel that I'm solving very fast, remember, first a student is supposed to watch our EO class and income tax problems that we solved in from CA. Only then you should watch these videos. Okay, because I am solving all this on an assumption that you already watch EO classes and those problems, and you're already tremendously commendable. Okay, commendable in the concepts, and that's the reason I'm explaining with the concept. I'm explaining. That's it. So if you do not understand, repeat the video once again, you'll get it clear. That's it. Next up, there will be some first time students. No, they won't even have any idea about this app. They'll be watching and commenting, I'm not able to understand. What? When you will understand only first when you go through the provision first and go through and solve my EO classes. Then this is additional complementary class for CMA students. Yes or no? Next, are you clear? Recovery of unrealized rent. Whatever it is. Okay. Ali owns house property let out since 1st April 2020 to a school for a monthly rent of 10,000. Okay. There was no change in rent until 31st March 2024. That information was irrelevant. Okay. On maybe that information is relevant for unrealized rent computation purpose. We don't know. Okay. On 1st April 2024, as per court decision, rent was increased to 12,000 per month. Now this year rent is what, 12, with retrospective effect from, so retrospectively from 1/4/2022 means for 2 years 2,000 per month for 12 months 48,000 rupees area you might be receiving, correct? And duly paid by the school in the same year, means in the current year 1st April 2024 court passed a decision and the school paid, means arrears received how much? 48. Legal expenditure is 30,000. That and all doesn't matter. 48 minus flat 30%, balance is taxable. Easy or not? Next, still how many problems were there? 5 more. That's it. Okay, we'll finish. Okay. X Limited has 2 residential house properties, both of which are vacant. Municipal value of the first house is 1 lakh and that of second house is 80. It has computed income from house property as below. Oh, they only computed. Okay, X Limited has 2 houses. Okay, this is house property 1. Remember, this is house property 1, this is house property 2. Okay, this house property they gave a computation. Now 2 residential properties. Okay, SOP first one. Okay, NAV 0000. Okay, so income from house property nil. Okay, maybe interest is not there. House 2. Okay, GAV 80 30%. Okay, so 56 total income. Do you agree with the computation of income from house property? Okay, they are asking, do you agree with the income from house property? Yeah, for an SOP, NAV minus interest is equal to income from house property. Correct. Both of which are wait, both of which are vacant. Both of which are vacant. Both are unoccupied during the year. For any 2 properties, even though they are unoccupied or self-occupied, I can claim NAV is equal to 0. For house property 2, you should not compute. You should do how much? NAV is equal to 0. Correct? In both the cases, NAV is equal to 0 you should do. Okay, whereas such benefit can be claimed only by individual, a company of the SSC. By the way, X Limited, wait, very good observation. Yeah, it's a company here. Remember, NAV is equal to 0, who can claim? Individual and HF only can claim deduction. Yes or no? A company cannot claim. Self-occupied property benefit will never be available for a company. Yes or no? So, in both the houses, it should be treated as deemed let out property. We always read this point, but we never make an observation because we always do from individual HF. Here also, we forgot to see the company name. We directly read the properties. Correct? So, since it's a company, SOP, UOP, NAV is equal to 0 benefit. We cannot claim. Agreed or not? Good problem, good observation, no? So when you cannot claim SOP, when you cannot claim NAV is equal to 0, both are treated as DLOP, then automatically municipal value 1 lakh is GAV, for house to it is 80. So 80, 1 lakh 80, minus 30%, automatically you will get the answer. 1 lakh 80 minus 30% is equal to automatically 126. Correct? Okay. Yeah, correct only. That's it. Hello. Easy, no? Illustration number 2. Oh my god, so much is there question. Okay, Abdul Hassan owns 3 houses at Ranchi. He furnishes the following particulars for the year 24-25. The house was constructed in 2024, which means I assume that it is constructed in 2024 April after. Okay, which means pre-construction period end is 31st March 24. Pre-construction period end is 31st March 2024. Fine, we'll see. Okay, and let out to a friend on a monthly rent of 10,000 up to 31st January 2025. And thereafter it was let out at its fair rent of 15,000 per month. Okay, which means throughout the year it was rented. There is no vacancy. Can I interpret that way? It is let out to a friend up to 31st January. Thereafter, it was let out at fair rent itself. Originally, it was rented at 10,000. Thereafter, rent is 15,000. Nothing but. Okay. Which means indirectly, there is no vacancy. Because they didn't talk about vacancy. Next, he has paid 15,000 as municipal taxes, which is 10% of the municipal value, which means indirectly municipal value is 1.5 lakh. This is important for step number 1 computation. Yes or no? Insurance premium irrelevant. Fine. Next, house number 2. House number 2. Ground floor is let out at 20, whereas first floor identical to ground floor is occupied by him for self-occupied. Okay, residence. For this, no, for first floor, no, you can take SOP benefit, no problem. Municipal taxes paid 20% amounted to 80,000. 80,000 divided by 20%, municipal value is 4 lakhs. So indirectly house property municipal value is 4 lakh. Total house property value, not unit 1, unit 2. Okay, fine. Third one. The house was constructed. The house was constructed in 2012. The house was constructed in 2012 and is used for his business. This is straight away excluded in house property purview. Yes or no? It will be a fixed asset in PGBP. Value of the house municipal taxes irrelevant. Next, a loan of 40 lakh had been taken on 1st June for construction of house number 2. Remember, it's house number 2 loan. House number 1 loan is not given. So I assume that house number 1 is available from 1st April 2024 onwards. House number 1 is available from 1st April 2024 onwards. It is available, I assume. Okay, fine, we'll see. If at all they gave information, that we will take. Okay, so house number 2 and construction of the house was completed on 1st June 2023. He repaid entire loan on 31st December. Most important, this is for current year interest calculation. He repaid entire loan on 31st December 2024 related to house number 2. Next, interest on loan is payable at 12% per annum. Now compute income from house property. Fantastic question. Only house number 1, house number 2. Yes or no? House number 1, house number 2. House number 2 is directly a let out property. House number 2 is also a no. House number 2 has 2 units. Unit 1, unit 2. No. Ground floor, first floor. Agreed? Yes or no? Now gross annual value. Okay, minus municipal taxes paid. Then what you get is net annual value minus 30% of NAV minus interest on loan. Now house number 1, gross annual value I have to calculate. House number 1. Now you see municipal value is 1.5 lakh, correct? So gross annual value computation. Step number 1. Expected rent is what for house number 1? 1,50,000, correct? Hello? Yes or no? How do I compute 1,50,000 municipal value? Where it is given 15,000 municipal taxes paid, which is 10% of the value, means municipal value is 1,50,000. Then step number 2. Okay, actual rent receivable. How much is the receivable rent? From 1st April to 31st January, 10 months it is 10,000. 2 months it is 15,000. So 1 lakh plus 30, 1,30,000. Step 2 is 1,30,000. There is no unrealized rent. So step number 3, whichever is higher, gross annual value is what? 1,50,000. Correct? Can I take up this like this? Minus municipal taxes paid 15,000, they already gave. Net annual value 1,35,000. So okay, everyone. So 40,500. Interest on loan point they have not given at all. So for house number 1, loan details have not given, which means there is no loan. Correct? 94,500 is income from house property for house number 1. Okay. Now house number 2. House number 2, ground floor is rented. First floor is self-occupied. So first floor directly NAV is equal to 0. 30% NAV benefit also will not come. Now we need to calculate interest. We need to calculate GAV so that remaining all numbers will be filled easily. Yes or no? Now house number 2. House number 2. Municipal taxes is 20% amounted to 80,000. Remember, ground floor identical unit to first floor. So municipal taxes, how much it is? 80,000 paid, which means for first ground floor how much it will come to? 40,000 it will come. Correct? Next, now for ground floor municipal value I should calculate for ground floor alone. Okay, for ground floor, step 1, for ground floor, remember municipal value 4 lakh, but I will take only 50% related to ground floor. Yes or no? Ground floor related, how much it is? 2 lakh. Yes or no? Then next one, house number 2 is rented for how long? House number 2 is rented throughout the year. There is no vacancy point. Yes or no? Nowhere. This is only loan point. So house number 2 vacancy is not there. Yes or no? 20,000 it was rented for 12 months. Agreed. Yes or no? Step number 2 answer is 2,40,000. Whichever is higher automatically. 2,40,000. Ground floor. The answer is gross annual value is what? 2,40,000. Agreed. Net annual value is 2,60,000. Yes or no? Now interest. Now interest. Now you see there is a pre-construction period interest and there is a current year interest. Okay, construction was completed on. Now look at, so interest on loan. Interest on loan for which house? House number 2. Loan was borrowed on 1st June 2022. Agreed. 1st June 2022. So construction completion date is what? 1st June 2023. 1st June 2023. So which means 23-24 year of construction before 31st March. 31st March 2023. Correct? So only this 10 months is PCP period. Correct? Now, what is the loan outstanding? Remember, loan is repaid only in 2024, which means as on 31st March 2023, loan is not yet repaid. So, how much is the loan? 40 lakh, 12% rate of interest. Correct? 40 lakh into 12% into 10 by 12. This is PCPI. Agreed. Into 10 divided by 12 is equal to 4 lakh. Hello? This 4 lakhs you will claim reduction in 5 installment, 80,000. Correct? First installment will be 23-24. Second installment will be 24-25. Right now we are doing for second installment. So 80,000 I will claim plus current year interest. Remember, 40 lakh loan is repaid on 31st December. 40 lakh loan repaid on 31st December, which means here 9 months only it is outstanding, plus 12 months is equal to 3,60,000. 40 lakh into 9 by 12. Okay, 40 lakh into 12% into 9 by 12. 3,60,000. Correct? So total interest is 4,20,000. Correct? This 4,20,000 is for ground floor plus first floor together. This 4,20,000 is for ground floor and first floor together. Equally I should allocate 2,10,000 and here it is 2,10,000. Agreed? Yes or no? Now first floor I will restrict it to only 2 lakh because it's a self-occupied portion. For a let out portion, how much ever is there I will claim. Yes or no? Remember, I am counting both PCPI, all that. Hey, no, 4 lakh. What are you? Immediately tell me. It's okay. 4,40,000. It's okay, fine. So 2,20,000. This is 2,20,000, 2,20,000. Correct? Amma, thank God. Okay, so it is restricted to 2 lakhs. Now 2 lakhs minus 2,20,000 minus 60 is equal to negative answer is 80,000. Here negative answer is 2 lakh. So total combined answer is what? I will combine these three. Yes or no? 94,500 minus 80,000 minus 2 lakhs is equal to minus 1,88,000, 1,85,500. Agreed. Minus 185,500. What is the answer given? Oh my goodness, my 164,500 they gave answer. Why? What happened? First of all, interest calculation correct? Yes, correct. 2,20,000 here it is restricted to 2,80,000, 2,80,000. This answer is correct ours. Okay, this answer is correct. 82 lakhs correct. Now why we did first one mistake? 1,80,000. 1,80,000 here. How much is the municipal value? Municipal taxes paid how much here? Array house one. 10%, 15,000 divided by 10%, 1,50,000 only, no? Okay. Oh, wait. There is a twist here. Some fantastic information. Look at. Actual rent 10,000 up to 31st January. Yes or no? Then after it was let out at a fair rent of 15. Indirectly fair rent details also they gave. What is the property fair rent? 15,000 per month means per annum 1,80,000. 1,80,000 is a fair rent. Municipal value 1,50,000. Whichever is higher. Expected rent 1,80,000. Then actual rent. Such a good observation, no? Expected rent is actually 1,80,000. Correct? 1,80,000. Only that went wrong. 1,80,000 automatically comes. Correct. You understood why it is 1,80,000? They indirectly gave a fair rent data. Yes or no? We only perceived it as actual rent and computed correctly, but we failed to observe that that was a fair rent. Very good observation. Clear? So 1,80,000. Now automatically it will be 1,65,000. 1,65,000 minus 1,65,000 minus 30%, which will be 1,15,500 minus 80,000 minus 2 lakhs is equal to 1,64,500. That's it. That's the answer. Fantastic observation. Yes or no? Immediately it struck me. So you should, that's how you should immediately. So fair rent indirectly they gave. Step number 1, how to compute fair rent, similar value, similar property rent, a municipal value, whichever is higher, restricted to standard rent. Municipal value alone we considered. Fair rent we missed. It is given. Next one, illustration 63. Then after how many we have? Illustration 64. I think co-ownership last problem. Oh, 2 more problems only. Fine. We will compute and then finish it off. Okay. Next, illustration 63. Sarju Midi is the owner of 2 houses, okay, in Kolkata. From the following particulars of the houses, compute his income from house property for the year 25-26, assuming he has opted for old regime. Okay. Next, house number A, let out to an employee of the business. It doesn't matter, it's a let out. Okay. Of Sarju at 5,000 per month, which is necessary for the purpose of business. Oh. Here letting is incidental to business. Letting is incidental to business. This is okay, we'll see. Okay, we will consider. Okay, fine. Next next, municipal tax of 3,000 paid. Interest on loan was also paid. Okay, interest on loan taken is 9,000. Okay, no problem. Second, house B, it has 3 units. Okay, first flat is used by him for his own business. Okay, 3 flats are there. First flat is used, it's a 1 property, 3 flats. Second flat is used by him for his own resident. Third flat is let out a monthly rent of 15. Municipal taxes paid is 20. Fantastic question actually, this also. First flat is own business, right? This municipal taxes divided into 3 parts. Okay, 20,250 divided by 3, 6,750 for business, 6,750 for SOP portion, 6,750 for LOP portion. You remember, you can claim only LOP portion related one. Okay, unrealized rent of PY relating to third flat of house B is amounted to 10,000. Okay, that we will consider. A loan of 20 lakh was taken on 1st July for construction. Okay, loan point, I'll come back to it. Okay, I think now we are clear. House number here, I will not call it as income from house property, because here letting is incidental to business. It is important for business. Employee quarters, staff quarters, maybe company recovering 5,000 per month. It is given as a staff quarters at the end of the day. Therefore, it's a business property and the amount received will be taxable as business receipts under PGBP. Understood? So now directly only for house B ma. Okay, house B, flat number 1, no, not even flat number 1, because flat number 1 PGBP. Flat number 2, flat number 3, flat number 2 self-occupied property, flat number 3 let out property. Very good questions actually, very good question. Okay, no, second flat, correct. Okay, flat 3 is rented at 15,000 per month, and remember here there is no municipal taxes paid 5% they gave, municipal value they didn't give, you know. No, indirectly the municipal value at 5% is 20,250, means divided by 5%, municipal value is how much? 4,05,000. Yes or no? Should I consider this or not is doubtful. Okay, fine. So indirectly municipal taxes paid by him, because earlier no fair rent data indirectly they gave. So we'll see that 4,05,000 is for full property. Okay, for flat number 3, 1/3 only you should take. Okay, step number 1. Okay, 1,35,000. Step number 2, rented for how much it is? Step number 2, actual rent is how much? 15,000 per month. No vacancy at all. So 1 lakh. Thank God, 1,80,000. So therefore, whichever is higher, 1,80,000. Flat number 3, gross annual value is 1,80,000. Correct? 1,80,000. Now minus 6,750 municipal taxes. Net annual value is what? 1,73,250 minus 30%. Okay, now 1,73,250 into 1,73,250 into 30% is equal to 51,975. Okay, now okay, now interest, only if at all I calculate interest, answer will be over 0. Correct? Now interest amount, now you see 20 lakh was loan taken for entire house B. Remember 20 lakh is for full house B. Okay, construction of the house B was completed on 1st June 2023. Fantastic. Loan was taken on when? 1st July 2021. This is a very super learning. I'll show you. Interest on loan is 12% per annum. No repayment was made. Okay. Now remember, 20 lakh is the loan taken. Okay. Now if you observe, first house is used from construction completion date. First flat is used for business purpose. Correct? Now you see how I will do is, interest on loan. Correct? Flat number 1, 1st July 2021, a loan taken 1st July 2021, construction completed on 1st June. Correct? 1st June 2023. Whatever interest I incurred, no, I will add it to buildings block. Correct? Explanation 8 to section 43 subsection 1. Explanation 8 to 43 subsection 1. Interest on borrowed loan or capital. Okay, which is used for the business or profession. If it is used for fixed asset acquisition, yes or no, asset forming part of block, up to the date of put to use, whatever interest expenditure incurred will be adding it to block. Correct? Then flat number 2, flat number 3 put together 2/3 of the loan. Correct? This is 1/3 of the loan. Correct? Now pre-construction period 1st July. What is pre-construction period? 1st July 21 to, remember construction completed on, hello, remember that construction completed on 1st June 23, which means PCP ends on 31st March 2023. 31st March 2023. Yes or no? So how many months it is? 2 years, 21 months it will be. 21 months. Okay. Now remember, 20 lakhs is the total loan, but I will take only 2/3. Why? Only 2 units related. Okay, into 21 divided by 12 months multiplied by rate of interest 12%. I'm just calculating PCPI. Rate of interest 12%. Observe once again, loan amount is 20 lakh, but entire loan amount is not used for house property head. Only 2/3 of it is used for house property, and PCPI period was 21 months. For 12 months 12%. What is 21 months? Yes or no? 20 into 21 divided by 12 into 12% into 2/3 is equal to 2,80,000. 2,80,000 is PCPI divided by 5. How much it is? 56,000 is the PCPI installment, which from which year you can claim? 23, 24, 24, 25, like that 5 years. In 24, 25 I will claim how much? 56,000 PCPI for flat 2 plus flat 3 put together. Okay. Now current year interest. How much is current year interest? By the way, did they give anywhere loan was repaid? No repayment was made. Specifically they mentioned. Yes or no? If repayment point is not discussed also, we assume that no repayment is made. Now again, current year 20 lakh into 12% into 2/3 only. Yes or no? Into 12% into 2/3 is equal to 1,60,000. Total interest is 2,16,000. Correct? 2,16,000 divided by 2. Here 1,08,000. Here 1,08,000. Correct? Therefore the answer is, okay, negative 1,08,000, and here it will be 1,73,250 minus 30% minus 1,08,000 is equal to 13,275. So net income from house property is, yeah, 94,725 negative. That's the answer. Super, we did. You understood? Business is linked, everything. Now remember here, municipal taxes 6,750 you will claim in PGBP, and interest expenditure from 1st July 2021 to 1st June 2023. Remember, I showed, no, this interest I will add it to block. I will not claim deduction. And in 24-25 current year interest of 1/3 portion is there, right? 1/3 portion is 80,000. That again you will claim as deduction in PGBP. That's it. And I told this point even in our concept class very clearly. Now application we saw. If this kind of questions comes in exam, students pakka they will do mistake if they did not solve this kind of problem. It's amazing problems we have in CMA study material. Correct? I'm very happy that very good problems are there. I myself, for me itself, it's like a learning. Okay, next. Next time when I'm taking a batch, no, here I learned all so many new observations, right? I will teach them in the next batch. I will be discussing CMA material, all the problem stuff I'll be discussing that also. Next, very good actually. 64. Okay, Ram and Shyam are co-owners of house property. Individual share, Ram 75%, Shyam 25%. The property self-occupied by both of them. Interest on capital borrowed was 4 lakh. Interest itself is 4 lakh. Find out income from array, both of them NAV 00. Yes or no? Interest on loan is 4 lakhs, 3 by 75% here, and yes or no here. So 3 lakh it will come allocation, but per SSC maximum limit is 2 lakh. For Shyam 1/4 portion will be 1 lakh only. Anyhow within 2 lakhs, no problem, answer over. That's it. Yes or no? With this, entire house property discussion is over. Very good. No problems in house property. Huh? 65 is there? One more. Oh, one more question is there? Okay, fine. Okay, fine. We'll solve it. Oh, I thought I missed it. I didn't see. Ram and Balaram are co-owners of property. Individuals, Ram 60/40. The property been let out for 10,000 per month. Interest on borrowed capital, fire insurance premium for the building 10,000. Municipal taxes paid 5,000. Combined income from house property. Very simple. Gross annual value. In municipal value and all they have not given. Yes or no? Gross annual value is actual rent 10,000 per month into 12 months. 1 lakh 20 minus municipal taxes paid 5,000. Therefore net annual value 1 lakh 15,000 minus 30% minus interest on loan how much? 80,000. Fully 80 you can claim. Correct? Hello? Yes, is equal to 1 lakh 15,000 minus 30% minus 80,000 is equal to 500 rupees. So Ram income is 60%, 300 rupees. Bima Balram income is 200. Okay, actually for co-ownership in CA Inter the problem is very good. Arun Bimal something problem is that is actually very good. Okay, co-ownership problem, that's very good. Their good learning is there in CA Inter book, which I already covered in EO class. Okay, very good. Over. That's it. House property problems are over. Except one or two few, except some initial 3-4 questions and one or two, rest all other questions amazing points we learned. Okay, that's it.